When Tesla emerged onto the automotive scene in the mid-2000s, few could have predicted that an upstart electric vehicle (EV) maker would shake up the entire auto industry. Yet by the 2020s, Tesla had become a household name, inspiring automakers worldwide to accelerate their own EV strategy. How did this once small Silicon Valley venture come to dominate headlines and chart a new course for zero-emissions driving? Below, we'll explore Tesla's evolution, the visionary role of its leaders, and the broader transformation of the car business, from gasoline-powered mainstays to cutting-edge electric mobility. Tesla was incorporated in 2003 by a group of engineers, Martin Eberhard, Mark Tarpenning, J.B. Straubel, and Ian Wright, who believed lithium-ion battery technology could make electric cars practical for everyday driving. Named after Nikola Tesla, the 19th-century inventor whose AC motor underpins modern electricity, the company aspired to create EVs that were neither golf cart slow nor aesthetically dull. Their goal: build a performance-oriented electric sports car that would upend old stereotypes about battery power. Elon Musk, then a successful tech entrepreneur, having co-founded PayPal, invested early in Tesla and became its chairman in 2004. Over time, Musk's financial support and public stature gave the fledgling startup more clout. The founders envisioned that a high-performance sports car could prove EVs were not just for environmental enthusiasts but could rival traditional performance cars in speed and excitement. This concept took shape in Tesla's first model, the Roadster, introduced as a prototype in 2006. Launched in 2008, the Roadster was a sleek, all-electric convertible capable of going from 0 to 60 miles per hour in under 4 seconds, impressive by any sports car standard. Based partly on a Lotus Elise chassis, the Roadster's real innovation lay in its advanced battery pack, providing over 200 miles of range on a single charge. Though niche and expensive, initial models exceeded $100,000, the Roadster showcased that EVs could be both thrilling and viable. It also attracted press coverage that piqued the interest of early adopters, green enthusiasts, and technology aficionados. Not everything was smooth. Building an EV from scratch required hefty capital for R&D, manufacturing facilities, and battery supply. Around 2008 to 2009, Tesla faced financial strain. The global recession, triggered by the financial crisis, curbed venture capital flows and shook consumer confidence. Musk himself loaned Tesla money to keep operations afloat, occasionally tweeting that the company came close to collapse multiple times. During this era, Elon Musk's role deepened, and by 2008 he had taken over as CEO. Original founders like Eberhard departed amid internal tensions over management and strategy. From then on, Musk became the driving force behind Tesla's public image and product direction. To keep Tesla's electric ambitions alive, government assistance proved key. In 2009, the U.S. Department of Energy, DOE, extended Tesla a $465 million loan under an Advanced Technology Vehicles Manufacturing Program aimed at promoting greener cars. This loan allowed Tesla to move forward with the Model S project, an all-electric premium sedan that would become the company's make-or-break endeavor. Unveiled in prototype form in 2009, the Model S took the idea of a luxury EV further than the Roadster. It promised a sleek exterior, a spacious interior, and the range and performance that might challenge the best gasoline sedan. Many industry analysts were skeptical. Could a startup truly build a complex, full-featured sedan profitably? But with the DOE loan and further private investment, Tesla pressed on. The Model S signaled Tesla's transition from low-volume sports car maker to a more mainstream automaker. In mid-2012, deliveries of the Model S began. Reviewers lauded its rapid acceleration, smooth ride, and stylish design. The large, tablet-like touchscreen and over-the-air software updates felt revolutionary compared to legacy automakers' offering. Most importantly, with certain battery configurations offering over 200 miles of range anxiety was less of a hurdle than previous EV attempts. For many, the Model S represented the first EV that wasn't a compromise. It was desirable on its own merits, not merely an eco-conscious statement. The car earned numerous awards, including Motor Trend's 2013 Car of the Year, bolstering Tesla's credibility. Customers, once uncertain, flocked to place orders. A cult following emerged, with owners praising Tesla's direct sales model, smartphone app integration, and minimal maintenance needs. Electric motors have fewer moving parts than internal combustion engines. A critical piece of Tesla's strategy was building its own fast-charging infrastructure, the Supercharger network. Launched in 2012, these stations offered Tesla drivers free, initially, high-speed charging along major travel corridors. By placing chargers at key intervals, Tesla reduced the anxiety of long-distance EV travel. Competitors lacked anything comparable, which gave Tesla an edge. Not only did the brand build advanced cars, but it also ensured a proprietary fueling solution, similar to Apple's ecosystem approach in consumer electronics. Buoyed by Model S sales and the hype surrounding the brand, Tesla's stock soared in the mid-2010s. In 2013, Tesla repaid its DOE loan 9 years early, silencing critics who labeled it a government-dependent experiment. The company started posting quarterly profits on occasion, though it frequently reinvested heavily in growth. Musk's vision to accelerate the global transition to sustainable energy attracted fervent supporters and investors, convinced Tesla's potential stretched beyond mere car manufacturing. Seeking to branch out, Tesla introduced the Model X in 2015, a luxury all-electric crossover SUV featuring dramatic falcon wing, rear doors, and advanced semi-autonomous driving capabilities, Autopilot. Though visually striking, the Model X faced production delays and complexities due to its intricate door mechanisms and heavier design. Tesla struggled with ramping up manufacturing, revealing the pitfalls of over-engineering and the challenge of building new vehicles at scale. Despite these woes, the Model X found a niche among premium SUV buyers, continuing Tesla's push into higher volume segment. All along, Musk had teased a more affordable EV as the real endgame, a car that could truly drive EV adoption mainstream. That was the Model 3, unveiled in 2016 and priced around $35,000 to $40,000 before incentive. The unveiling garnered hundreds of thousands of pre-orders, signifying pent-up demand for a budget-friendly Tesla. But fulfilling that demand proved daunting. Production ramp for the Model 3 in 2017 to 2018 encountered production hell, as Musk famously called it, with bottlenecks in battery module assembly and general automation pitfalls in Tesla's Fremont factory. Nevertheless, by 2019, Tesla overcame many hurdles, delivering the Model 3 at scale. This compact sedan propelled the company to new sales records, eventually making the Model 3 the world's best-selling EV. Critics who once doubted Tesla's ability to mass-produce cars watched the brand begin to chip away at the mainstream market, especially as EV incentives and environmental awareness grew globally. Central to producing EVs en masse is the battery. In 2014, Tesla announced its first Gigafactory in Nevada, an enormous facility co-funded with Panasonic to produce lithium-ion cells at unprecedented scale. The goal: cut battery costs and secure Tesla's supply. Over time, Tesla launched or announced additional gigafactories in New York, China, Germany, and Texas, each tasked with different roles: solar panel production, EV assembly, battery pack fabrication, etc. This integrated approach gave Tesla more control over its supply chain, echoing Musk's broader philosophy of vertical integration. In less than a decade, Tesla transitioned from a curiosity to a market force. Traditional automakers, once dismissive, found themselves pressured to develop competitive EVs. Companies like GM launched the Chevrolet Bolt, Nissan updated its Leaf, and Volkswagen invested billions to pivot to electric platforms, ID.3, ID.4 line. Meanwhile, premium brands like Audi, Jaguar, and Porsche introduced their own high-performance EVs, taking direct aim at Tesla's Model S and Model X segment. Regulators also caught on. Many countries proposed bans on internal combustion engine sales within a few decades, fueling the notion that the auto industry was heading towards electrification. Tesla's success popularized the idea that EVs were not just environmentally friendly, but also technologically advanced, fun to drive, and socially resonant, with a broader push to tackle climate change. Another Tesla hallmark has been relentless software updates and driver assistance system. Launched in 2015, Autopilot used a suite of cameras, radar, and ultrasonic sensors to help with steering, braking, and lane keeping on highway. Over-the-air updates refined these capabilities, showcasing Tesla's tech company-like approach to cars, where improvements continue after purchase. Despite controversy and several high-profile accidents related to misuse or limitations of the system, Autopilot underscored Tesla's willingness to push the envelope on vehicle automation. By the late 2010s, Tesla's stock market valuation soared, sometimes surpassing the combined valuations of traditional automakers. Advocates saw Tesla as not just a car company, but a technology and energy enterprise, diversifying into solar power via the SolarCity acquisition and stationary battery storage solution, the Powerwall and Powerpack. Skeptics criticized Tesla's frequent unprofitability, though the company eventually reported steady quarterly profits by 2020. Musk's mercurial public persona, combined with Tesla's remarkable growth, led to volatile share price swings, yet the overall trend remained upward. China emerged as a crucial EV battleground. Tesla opened its Gigafactory Shanghai in 2019, the first wholly foreign-owned car plant in China, allowing Tesla to build and sell vehicles locally without hefty import tariffs. This foothold in the world's largest car market proved essential, bolstering Tesla's global sales and brand presence. Plans for Gigafactory Berlin followed, aiming to capture European demand. The Model Y crossover launched in early 2020, blending the Model 3's platform with an SUV body style, one of the fastest-growing segments globally. Tesla also teased future products like the Cybertruck, an angular electric pickup, and Tesla Semi, an electric Class 8 truck. Musk repeatedly emphasized how each model, coupled with expansions in battery technology and software, would move Tesla closer to a comprehensive ecosystem of sustainable transport. Despite successes, Tesla faces ongoing hurdles. Competition, legacy OEMs and startups, Rivian, Lucid, NIO, XPeng, etc., are releasing advanced EVs. Quality control. Tesla has wrestled with panel gaps, paint issues, and service concerns that hamper its reputation as it scales. Autonomy. Regulatory scrutiny of autopilot and full self-driving claims intensifies, with safety agencies demanding clearer disclaimers. Supply chain. The semiconductor crunch and battery material constraints can slow production and raise costs. Moreover, Musk's management style, mercurial tweets, high-risk decision, can lead to negative PR or legal entanglement. Yet the brand's core identity, innovation, tech-savvy cool, environmental stewardship, keeps a loyal fanbase. Above all, Tesla's greatest legacy might be its role as a catalyst. By proving electric cars could be aspirational, fast, and profitably produced at scale, Tesla forced an entire industry to accelerate EV planning. In Europe, sales of diesel cars plummeted after the Volkswagen emissions scandal, further boosting EV demand. Governments introduced incentives, infrastructure projects, and emissions regulations to spur EV adoption, aligning with Tesla's mission to accelerate the world's transition to sustainable energy. Consumers now expect more than just a battery under the hood. They want cars that deliver integrated software experiences, quick updates, and minimal maintenance. Tesla's direct-to-consumer sales model and lack of traditional dealerships also influenced how customers purchase cars. Many automakers are re-evaluating their distribution models, albeit with legal complexities in certain regions. As of the early 2020s, the electric car revolution is still in mid-flow. Battery costs keep falling, charging networks expand, and fresh policy measures push for cleaner transportation. Tesla's role, while no longer alone in the spotlight, remains pivotal. Whether it retains its lead in market share or is overtaken by the combined might of legacy automakers, Tesla's example has undeniably changed what consumers and investors expect from the auto sector. Elon Musk famously declares Tesla as much an AI/robotics company as a carmaker. Projects like the Tesla Bot humanoid robot, full self-driving, FSD, technology, and integrated solar battery solutions illustrate an ambition to expand beyond personal vehicles into broader realms of energy and automation. While critics question how realistic these expansions are, Tesla's track record of turning seemingly improbable ideas, like a profitable mass-market EV, into reality leaves many cautious about dismissing future visions outright. At the same time, the global transition to EVs faces complex challenges around raw material sourcing, lithium, cobalt, nickel, recycling, and energy grid capacity. Tesla's scale means it must actively address sustainability and supply chain ethics, going beyond marketing to ensure genuine environmental benefit. In parallel, Tesla's success has prompted governments and companies to consider hydrogen fuel cells, synthetic fuels, or other alternatives. The future of mobility likely won't be one-size-fits-all, but Tesla's central role is all but assured. From a scrappy startup with a niche electric sports car to a multi-billion-dollar juggernaut orchestrating gigafactories worldwide, Tesla's saga is one of audacious goals and relentless innovation. By proving electric vehicles could be both high-performing and desirable, Tesla broke the inertia in an industry hesitant to abandon internal combustion. Government policies, consumer awareness, and global sustainability goals have all aligned to place EVs at the center of automotive strategy. Tesla's journey has had its share of setbacks, financial crises, production nightmares, quality controversy, but each time, it leveraged a combination of strong branding, visionary leadership, and technological breakthroughs to press ahead. Today, Tesla stands not just as a carmaker, but as a symbol of what ambitious engineering and entrepreneurship can achieve in tackling the climate challenge. Whether in 5 or 10 years Tesla remains the top EV builder or is overtaken by established rivals, its spark ignited an electric revolution that grows stronger with every new battery on the road.